Welcome to another weekly S&P 500 analysis. This week, I'd like to start off by looking at the market sentiment and the market internal before we go and look at the price action of the S&P 500 and the NASDAQ. So starting off with this chart here, this sentiment chart, we see that the S&P 500 is sitting right near this particular potential support area here. So the sentiment showing that the VIX is back up inside of this caution zone here between 20 and 30. So the market participants are getting a little bit more cautious now. Remember the prior week, it was down below the 20, so they were getting a little bit complacent. And also they are still remain to be bullish because the put call ratio is still below that 0.75 level, although it is not as bullish as the prior week, but still nevertheless they are still buying more call than put. So until the put call ratio is back inside of this 0.75 and 1, we basically looking at the market participant as being cautiously bullish right now based on this sentiment chart here. And if we look at the New York Stock Exchange up-down volume ratio here, we see that on Wednesday after the bad bond auction, we saw the up-down volume ratio actually turn quite negative, and it was -7 to 1 in favor of the down volume. And in addition to that, we also saw broad market participation on the downside. There were over 2,200 more declining stock than advancing stock on Wednesday. So right now it is slightly, in the negative here. As you can see, we have 4 consecutive down day on the S&P 500. And for the new high versus new low in the New York Stock Exchange, it's pretty much been flatlining, not too much of one side or the other, and basically just kind of hovering in the lower double-digit type of number for a number of new high and number of new low. So it's nothing to write home about, and that kind of tells you the state of the market is pretty much in a sort of a neutral stand right now, waiting for something or waiting for some sort of catalyst to move it one way or the other. And here looking at the cumulative AD line, this peak, this set up a positive divergence between the S&P 500 and the AD line. So we are still looking for the possibility of this high get tested and possibly be taken out as we resolve this positive divergence in the future. But right now, the AD line is going down along with the S&P 500. So it's pretty much in sync with each other. And looking at the NASDAQ market, the NASDAQ is also showing similar type of behavior on Wednesday after that failed bond auction. We also saw 3 to 1 in favor of the downside on Wednesday. Remember on the New York Stock Exchange, it was over 7 to 1 in favor of the downside. But the market participation, there was market participation on the downside as well based on the AD. The advanced decline, and there were 2,700 more declining stock than advancing stock on Wednesday. So as you can see, it is still carrying this negative tone here. Even on Friday, we had 825 more declining stock than advancing stock. Similarly to the New York Stock Exchange, the new high, new low in the NASDAQ market is pretty much neutral as well. It didn't go either way to much of a degree here, just kind of hovering around this flat line. And on Friday, there were 47 more new stock make new 52-week low than 52-week high. But the number of stock that make new 52-week low is only 113 versus 66 stock make new 52-week high on Friday. And as far as the cumulative AD line goes in the NASDAQ market, it is also going down along with the NASDAQ 100 index. So we are not seeing any sort of a divergence here. So as you can see from the market internal and also the market sentiment, basically the market is in a hold and wait state and waiting for the next catalyst to get a directional move. Although we are seeing that the S&P 500 is just made 4 consecutive down day, and in the past history, when we see a 4 consecutive down day, we expect a certain probability that we will get a bounce off of that. So let's go and take a look at the price action and see what happened after we make a 4 consecutive down day on the S&P 500, and also take a look at what are some of the possible price scenario for the coming week for the S&P 500 and the NASDAQ 100. During the last 10 years, we had a little bit better 50-50% that after 4 consecutive down week on the S&P 500, we see a little bit of a bounce. So looking at here, we basically had 57 occurrence, including the recent one. And basically saw 33 of them actually got a bounce. Like for example, here on this day, when it hit 4 consecutive down day, the following day, we have a little bit of a rebound. So there's a possibility, I mean, better than 50-50, that we could see a bounce up or a reversal day on Tuesday when the market resumed trading after the Memorial holiday. Now, looking at the S&P 500 chart here, let's see what the market is actually pricing in for the coming week. The market is pricing in the upper range between 59.40 and 59.21.50, and the lower range between 56.84.10 and 56.40. So what we're going to see is see if the buyer be able to hold above this 5800 zone and push it back up to the 5900, and see how strong this bounce is, because we could encounter some resistance here and possibly just push us back down into this 5700. Still looking for this gap to get filled in the near term. So I wouldn't be surprised if we get a little bounce and then come back down. So the question now is, will we get a bounce before it come back down, or will it just continue to come down and fill this gap? Then we'll see, would it be able to find some support here at this 5700 area and push us back up. So that's basically what I'll be looking for in the coming week on the SPX. And for the ES, the E mini S&P 500, and here's what the market is pricing in for the coming week. The upper range is 59.45 and 59.33, and the low range is 56.96.50 and 56.45. So you see that it came down to this 5800 area here last week on Friday, and found buyer come back in, and it push the price back up, although it did not come back up into this price zone here on the close, but it did settle in this high volume area. So in the coming week, we're going to see what we continue to see the buyers step in and get a little bounce here and possibly get up to this 5900 area, this high volume no, and then see what it get a push back down and into the lower range of the weekly expected move, and dip down into this 5600 price zone area. So that's basically what I'll be watching for, and see if we get a bounce or not, and then look for the next opportunity of the rejection, and see it come down, fill this gap, and come down here and test for support near this 5600 area on the ES. And here on the SPY, we see the SPY, the market is pricing in the upper range between 592.50 and 591, and the low range is 567.20 and 562. So again, we see that the price came down to this 580 zone and held that zone here on Friday. So once again, we're going to see would it be able to come up and push us up into this zone here somewhere around this 585 area, 586, and see would it be able to push through. And if it doesn't, then I'd expect it to come back down and fill this gap here and dip back into the 565, 560 zone, and see would it be able to find support for another push up. Looking at the NQ, the E mini NASDAQ 100 futures, you can see that it came up and went back down below this 21,000 zone and found support here, found buyers, and then pushes back up. Right now it's trying to close back up at this 21,000 area, and right now the market is pricing in for the coming week the upper range 21,555 and 21,479.75, and the lower range is 20,426.75 and 20,250. So what we'll be watching for the coming week is to see would it get a bounce back up and get above this 21,200 and see would it be able to push up into the upper range. Now we see that there has been some resistance here at this 21,600 area. So we're going to see would it be able to get through. If it doesn't, and we see a rejection, then we'd be looking for it to come back down into this 20,000 area, 20,500 and 20,000, just slightly about the 100 area, and fill this gap here and see would it be able to find some support and get another pushback up. And looking at the QQQ, the market is pricing in the upper range between 523.50 and 522.20. And the lower range is between 496.30 and 491. So what we're going to be watching here, once again, is to see will we get a bounce back up and possibly come up to near this 520 area and see will we get a rejection and push back down and come back down into this 490 zone and fill this gap here. And that would also come down and tag the lower range. Because I believe we still might see a little bit more downside before it try to build some momentum to come up and put the all-time high in play. So right now we're basically still looking at possibly come down and fill this gap down at this 491 area. So we'll see what happens in the coming week, but definitely we could see a little bit of a bounce from recent oversold. But anything is possible, so prepare. I don't believe any bounce that come along in the next coming days will be a sustainable upward move toward the all-time high. But hey, you never know. We just have to watch the technical and the MGI for clues. So I hope you had a good week and enjoy your extended weekend. And thank you for watching, and be sure to smash that thumbs up to give it a like. And if you are new to this channel, be sure to click the subscribe to this channel, and also go check out my newsletter at substack.com, the Pulse of the Market, and you will find additional content there. And be sure to subscribe to that newsletter as well. So thank you for watching, and good luck on your trading.